Thanks so much, Colin, for joining me on stage. As Japan's largest financial group, MUFG, I can safely say, has its fingers in almost every pie in Asia's energy transition, from renewable energy financing to the just energy transition partnerships and the early retirement of coal-fired power plants.
Sure.
And you've raised a good amount of sustainable finance since 2019, about $250 billion. You've done this job for 4 years plus now. What's keeping you up at night currently?
Yeah, thank you for that question. When you get to my advanced age, many things keep me up at night. But I suspect that you're asking me more in relation to what I do.
No.
And, well, I can safely say trajectories. What trajectory are we on in terms of approaching our net zero targets? What trajectory are all the countries in APAC on, and what we are doing in terms of approaching these things. So from what I think about on a daily basis or nightly basis is, are we doing enough? Right? And are the governments enabling us to do enough? And if we don't do enough, what happens? So the trajectories are important. They vary from year to year and from administration to administration. I won't mention which country. But it does affect us, and it does affect how we approach these issues.
Speaking of administrations, of course, the US, tariffs, the deal with Japan, all of that, the impact it will have on interest rates, right?
Right.
Are you seeing the clarity around deals in the region with the US and potentially the chance that we could have lower interest rates over the next 12 months, improving the bankability of any projects in the clean energy sector in this part of the world?
Yeah, so we see deals being announced almost on a daily basis, and sometimes twice a day. So the answer is, I hear a lot about these deals. I see the broad headlines, but when I go into the details, they're a little bit more unclear. So I think on two aspects. At least the governments have got some direction in terms of reaching deals with the US government. Let's not forget they drive a lot of trade issues. But the problem is, will these deals continue? As we suspect, as we fear. Sometimes they change, and they might change tomorrow, or the negotiators have not realized that somebody meant something else. But the other aspect of your question is whether they would lead to more deals. Deals are, especially in APAC, are driven by several factors. Obviously, one is clearly the interest rates that will make the deals doable. But also, it also is driven by demand. And demand from the individual governments are different from country to country. Asia is not one sort of anonymous mass. It is several countries. And I mean, two of them, China and India, represents like a quarter of the world. So they have a significant impact on what these deals get done. I think that deals being done purely on the basis of cheaper interest rates are not a good way of doing them. They should be driven by demand. They should be driven by the need to do these deals. So I think while we can get a flurry of deals, overall, on a larger scale, we will see the continued sort of a take-up of more sustainable deals coming forward.
So you're saying that the impact of tariffs and deals or lack thereof hasn't really changed the outlook for a lot of the clean energy related companies in the region yet? Or?
I think they have in a certain aspect. So if we look on a long-term basis, they will not have, because the countries and the desires of their aims are long-term. They last more than 4 years, as an example. And that would mean that people need to be concerned about the next administration, if that's what they're concerned about. And then the other one that's coming up, because infrastructure deals take a long time to build. I mean, you looked at that bird's nest of wires earlier. I mean, that was a matter of, like you said, non-planning. People just had demand build up, I'll put in a couple extra wires. But if you do that, then you will get that bird's nest, and that is not a sustainable sort of a scenario you're looking at. So they do need planning. Governments in Asia plan for a long time. I mean, the turnover, maybe except for a few countries, for governments is not so high. And that means that we can get a decent sort of a road forward.
What about that US fund, the $550 billion one, that Japan has decided upon with the US? Is MUFG going to participate in any way in that?
I think MUFG looks at all these funds in the same way, right? They support the national agenda and perspective.
Yeah.
And in this case, it's the Japanese government perspective. So we will support them. But how we support them is still being decided, and whether it's through cash or through support in terms of doing more of the agenda, that is still being decided.
I see. I want to turn your attention to JETP now.
Oh, my favorite.
So, of course, we all know 35 billion combined between Indonesia and Vietnam that was pledged by the US, Germany, Japan, and other countries.
Sure.
The portfolio website of the JETP in Indonesia says that $1.2 billion has been approved in JETP financing.
Right.
Can you tell me what the new reality is of JETP in Indonesia now? Because I think everyone's waiting for big bang numbers to come out of it, and we haven't really seen that yet.
Yeah. Okay, so I think for those in the audience who don't know, JETP stands for Just Energy Transition Partnership. And while most people focus almost entirely on the energy transition part, it's very important that everybody understands that the just part is equally important, or if not more important. And I will give you an example. If you look at part of the agenda on JETP, so there are two JETPs in Asia at the moment. One is for Indonesia, that was originally led by the US and Japan, and now it's by Germany and Japan. And the other one is by the UK, European Union, and Japan. So Japan figures quite prominently in both. When we decide on financing a transition project, so that could be transitioning from fossil fuel, right? So that's one of the criteria, one of the aims of JETP. We need to understand that it's just not shutting down the power station. If you ask a person sitting in Europe, they said the fastest way to decarbonize is just shut everything down. But it doesn't work that way because there are people involved in the plants. Very importantly, there's availability of power. So the just part is in order to design the program where you not only shut down and achieve your decarbonization, but you have a fair outcome for the people on the ground and also allow people to develop. So the answer is it takes a while for this agenda to get into place. There are many programs on the ground. You are looking at big numbers. So the mobilization is clearly just the mobilization. It isn't putting in from all those participants involved in JETP. It is to enable people to see that there is progress, there is hope for people to do these transactions, and other people join in. It's meant to sort of engender and to get people to do more transactions on that ground. So to come back to your point, it's taken a bit longer than we initially sort of hoped for, but it's getting there. So it's coming online. If you ask the Indonesian government, there was a change in government recently, as you know. They are still working on it. There are many programs that we're looking at, and we're all considering them.
How have things changed since Germany and Japan sort of took over the leadership in Indonesia, or on the Indonesian JETP, that is? Or has there been no difference to when the US was leading things?
There is a difference. I mean, Japan was always there. So in Indonesia, JETP was pushed off by both the Japanese side and the US initially. And as you know, the US have now sort of de-emphasized that part of the agenda. So Germany's come in. Germany is part of the European Union, so they need to look at things from that perspective as well. I think that it had a hiccup in the sense that you've changed leadership. So the style is different. The programs they're looking at is not vastly different. And it will pick up speed again. For the Japan side, we're the only Japanese bank on the Indonesian JETP. We haven't seen any slowdown from the Japanese government. They remain committed to providing help and providing financing in that respect.
Do you think we can see the shuttering of the coal plant before 2030?
We will see, okay, so I think, as you know, fundamental to growth is the availability of power. And the reason I say that is because the requirement for power is growing in Asia. If you look at what is available in terms of power and you just look at the cost for thermal power and the cost for renewable power, it looks very competitive for renewable power. But the nature of renewable power is different. So I think that what we are realizing is that if you go, like I said, if you go to a country and you tell them, shut down all your coal plants, it just can't work, right? It needs an ability to understand how the coal plants work, how a baseload coal plant works, and how that affects the country. The other point I heard recently was about, oh, I could just transfer power from this end of the country to the other end of the country. That may be attractive and viable, but it only happens when you have a network, when you have transmission network. And the bank itself is part of the working group, which is in the SSFA, looking at the ASEAN network. And that will allow us to bring power from one end of the grid to where it's needed the most. Right. So where it is effective, even if there's a cost of building transmission, it makes sense. Thereby slowing down the increase in the thermal power plant. But back to your question in terms of shutting down power plants, there are various programs. I mean, the ETM, which has been promoted by the ADB, is still under progress. It is a difficult question to answer because there are many aspects to it. You have the sanctity of contracts within that. You have people on the ground. My expectation is that it will eventually get done, and with that, we have a model of how to do these early shutdowns. But we need to get that done.
Yeah, and it involves innovative financial structures, right? Including the transition credits that Singapore is trying to create.
Correct. So the aspect of it is that it's all a matter of risk allocation and how you approach the risk allocation and how you sort of spread the pain, as it were. Because there are many parties involved. There's the Indonesian government. You shut down the plant early, how are they going to replace the power loss in that case? If the equity holders are going to be taken out, are they compensated? And the debt holders, and also the people on the ground. Don't forget, there are people on the ground that work in these plants and receive the power.
More broadly for your business, right? Where are you expecting to see more innovation, be it in blended finance, debt for development swaps? Are you looking at more innovative structures and products within sustainable finance? And where are you building up the team or products for?
Okay, thanks for that. I think I'll just pick up on your point on blended finance. I mean, blended finance is, in its concept, is not fantastically new. It's just a matter of risk allocation and finding who is the best person to put in that particular risk. The end product is what drives the structures. You can't have a structure driving the end product. If you do that, then you will come up with the wrong structure because you got the wrong answer. So you want to look at that. So what we think is that the countries which we think have the ability to do these runs, first of all, in terms of looking at the high risks, will be the countries that need the most development. So, for example, I'm not picking on any country in particular, but if you have a vast amount of coal that you need to do, then you'll need to understand how to structure it down. So what you look at is the end product. So you want the early shutdown. If you want to shut down on these things, the structures have to match that.
Right.
And the risks have to match the structures.
Yeah. So are you going to be hiring for any particular, not that I'm looking for a job, but are you going to be
I'll make a note of that.
Yes. Who not to hire? Yeah, so will you be adding to your product shelf in any way or hiring for, because we're seeing banks start to talk more and more about blended finance and actually build up their capabilities in that. Yeah. So, yeah.
So, as an example, blended finance is a very active and it's something that we're looking at in terms of what the bank wants to do. So we already have a team looking at that, and that's driving that scenario. We've started a blended finance fund called Gaia. So Gaia is already been kicked off, and that's going on. For now, we are looking at what we need to do. So the answer is, as the ramp up of demand comes, we will be looking at adding to the team.
Okay. For your established products, right, in green bonds and social bonds, I know we were talking about this and you mentioned that social bonds are doing well for you.
Yeah.
Can you talk to us a bit more about what work you're doing in the social space and how you're seeing that product segment grow?
All right. So, you know, the word ESG, again, people just concentrate on the E part of it. The S part is the social part. So within our own framework, we believe in trying to drive the whole scenario because they feed on each other in order to get the thing done. We are looking at the kind of transactions that are done mostly in Asia tend to be infrastructure. So infrastructure tends to be the energy portion of it. However, a lot of financial institutions and all the governments try to drive the social part. A lot of our loans that we're looking at in terms of the social facilities or social link facilities tend to be based on the frameworks provided by the government.
Okay. Do you have any numbers that you can share with us? What increase or what growth are you seeing?
Well, I have a big number, which is the 100 trillion yen number. So that is the number which our bank has committed to raising in sustainable finance. And that number has been raised 3 times since we started the team. I don't take any credit for raising that number, but it is, you know, clear to us that that is something that the bank needs to do. That is supporting our clients in terms of getting to the net zero numbers. The bank itself also has a net zero target for 2050. And we aim to continue to reach that target, and that is well within our ability to do.
Okay. And speaking of supporting clients, are you planning on changing the baseline scenario or temperature for transition pathways for your clients from 1.5 degrees to something else? 2, 3? Where are you at right now?
Okay, so the answer is we stick to the frameworks then. So the science-based frameworks, as well as the net zero targets that were set, which are still at 1.5. The Paris Agreement is still at 1.5. They haven't adjusted it. We continue to work to that. I don't think we've reached 2050 yet, and you know, there is still hope for us to be able to move that trajectory. That trajectory is the one that keeps me awake, as I said before, and that's the one that we're working towards.
Are you assessing, or how far are we from having a situation where banks assess companies on their physical climate risks and include that in the credit risk assessment, right? Decide how much to lend to them or how many bonds to underwrite or volume of bonds to underwrite as a result of physical climate risks
Right.
that companies face?
We are quite close to that.
So you're not doing it yet, but you're working on it?
We're working on it. And it's partly driven by regulatory requirements, partly driven by what our clients tell us. But yes, I think there will come a time quite soon that we will be looking at that scenario.
Okay, I know we've run out of time, but very quickly, what can companies do in response to that, right? Should they be setting up assets or factories elsewhere? Like, how should they be thinking about making sure that they're high up on your scoring or the assessment?
Okay, besides having a conversation with myself and the team, they should be looking at their trajectories. Like I said, it's all about the trajectories and mapping out what they need to achieve net zero. And then we have that conversation about how that is met and how we can help them. So anything we do to help them is part of our sustainable finance targets. So that's what I believe should be done.